Hi, welcome to this video today, which is on the 22nd of December. It's Saturday. Just be looking at some Forex pairs today. All include the yen, USD JPY, Euro JPY, CAD JPY, and NZD JPY. Now, regular viewers will know we've been very focused on the yen in recent videos. We were looking when we started, analysing yen pairs for 500 pip moves at least, and we've achieved that in some of the pairs we've been trading the yen in. The one which really didn't give us anything at all, I think I said it in the last video, USD JPY. I think that now, though, is confirming a big move to the downside. Now, the yen had some decent movement, but far more profit potential to come in our view. And it is the currency we like the most as we finish 2018 and go into 2019. I think the yen could move thousands of pips on other major currencies. That's, of course, over the longer term. Now, this time of year, a lot of traders pack up until the end of the first week of January. In my view, I would be alert for opportunities. Very often, between the end of December and the end of the first week of January, you get really big moves in the market. That's just historical. I think this year could be similar. Now, in terms of the pairs, we are going to go and have a look at them. But just for new viewers, what I want to stress is that we are going to keep our technical analysis very simple. We will be using our favorite tool in Forex trading to back up our technical analysis, which is a sentiment tool called the COT, the Commitment of Traders Report. If you do not know what it is, you can click on the explanatory link beneath this video and learn more about it. If you just want to watch the video through right now, just keep in mind what we want to do is always trade with smart money commercial hedgers, and their positions diverge significantly away from speculators. Also, keep in mind when I'm doing my analysis, it is my view as of right now. It can change in line with market conditions. If you want all our trading techniques and our daily technical sentiment analysis of 14 Forex pairs, you can get limited live access to our member center on the link beneath this video. Right, we'll start with USD JPY, COT, Commitment of Traders data first. On the chart of Japanese yen against the USD. Now, for new viewers, it's always foreign currency first when you do COT data. We're going to reverse the chart so it's the right way round in the moment, so it's USD JPY. We just want to see on this chart what the commercials, the smart money hedgers, are doing against the large speculators, and became really interested when the commercials built up this long position here. Specs heavily short against them. Very similar in terms of setup and size to this one here on the left of the chart, and you had a good rally to the upside, about 800 pips. Now, we did push off this level, but we came back to test, but the commercials came up again, pushed it off the level, dropped a little bit, came up a little bit more with their position size, pushed it off, and now she's kind of moved away from 88 or 114 in USD JPY. And we were trying to come in off the 114 level, which we did. We've now moved nicely down on USD JPY, but I think it's just the start of what could become a major bull move in the yen against the USD. So USD JPY, in our view, a long way to go on the downside. Now, what we're going to do is go and look at the charts the right way around. I'm going to start first of all very quickly with the weekly chart, then we're going to go to the daily chart and draw some levels. All right, this is USD JPY weekly chart. Just very quickly before we shift to the daily chart and draw our levels of entry, stop and target. Just drawing the 114 level. Okay, that is the level the commercials have sold into for well over a year. We saw that nice big move down on the left of the COT chart. Obviously, test again. Now we look like we're breaking down, but they defended it here as well and here. So 114 is a strong level. Okay, it's now held. Now, in terms of what we look for, just for new viewers, when you get a strong trend, and if we just take the US dollar from here, it starts to move higher, trend higher, breaks the 20-week moving average. If we're bullish, we'd look for that 20-week moving average to hold in strong trends or provide support, which it does on that red candle there, it does on that blue one, that red one, and those two tails there. But now we've sliced through it. It came in a little bit early off the 114 level. We came in at 113.50, but yeah, we were pretty confident that the level would break. So we don't mind being early. If we're wrong. It doesn't matter, okay? But looks like we've decisively taken out that level now. So we've gone away from the 114 level. Just draw a trajectory in there. Obviously, it was a nice move down, so you can always get a bit of a rally to correct oversold, so to speak. But it's going to run into trouble on those two candles there and the 20-week moving average. It should provide resistance, okay? Now, in terms of the weekly chart, I say it frequently, it always just gives you the big picture where the big levels are, but you can match up to your daily levels. Now, where is our first target on the downside? Well, I see no reason why we can't get down to there. That was the big move we saw of 800 odd pips down, okay, on the COT data a minute ago. So easily down to here in our view. Really, I'm going for the psychological 100 level. I could have taken this chart a little further left, but 100, the power level. I'll go through the sentiment behind the chart, why I think we're going to get such a big move in a moment. So if it comes to fruition, yeah, 1100 odd pips from where we are now. And yeah, I just feel this move is just starting. It's just being confirmed. Obviously, we'll see as we move forward. But let's go to the daily chart now, draw some levels in terms of entry, stop and target if you wanted to get into this as a fresh position. Right, let's look at the daily chart. Right, we're on the daily chart now. Just very quickly before I look at the price action, just go through the fundamentals and sentiment behind the chart. Why are the commercials so bullish of the yen and bearish of the dollar? Well, done 4 points. I'll just go through them very quickly. I've covered them in previous videos, but just for new viewers, USD rate hike expectations are fully priced in. Just a couple of months ago, market looking for possibly 3 Fed rate hikes in 2019. Now they only see the possibility of just one. Now, the US dollar couldn't hold above 114. It got above briefly when rate expectations were at their peak. It's not going to get as good again for the dollar. So that is bearish. On the other side, Japan to reduce stimulus. They've already tweaked their stimulus program to reduce slightly, but they'll be reducing more. Okay, so it's not going to get worse for Japan in terms of stimulus being increased, for example. That's been a big bearish fundamental for the yen. For us now, it's out of the equation. Big money flows are going into Japan, or going back to Japan, mostly from Japanese investors overseas. In terms of got a little bit of risk off in the market, they're bringing their money home. Also, businesses are bringing their money back to Japan as economic conditions improve a bit. But that flow of money into Japan could increase significantly if we get big risk aversion. We've already got some, but if things get ugly in the stock market, Japanese will bring more money home, and they'll be joined by foreign investors who want to invest in the Japanese bond market. It's a favourite place to park money in times of financial turmoil or risk off. The second biggest bond market in the world. So for us, everything looks pretty bullish long term for the yen. In terms of price action, obviously did have that brief poke above the 114 level. And our tactic has been to sell into the level. Okay. And when I did our last video, we were just above the 20-day moving average. You can see 1 candle, 2 candles, 3 candles there that were holding the 20. They couldn't push up towards the 114 level. So we thought we'd probably see a breakdown. We did come in early at 113.50, as I said when I was doing the weekly chart, but we we did take it out and then drop it back in below 112. Okay, so we just played safe just in case there was another rally, but there wasn't. Nice big red down, little red there on Friday. Let me just draw a trajectory. So trajectory across body, tail, tail. In terms of entering this trade, where would you enter it if you wanted to come in fresh? My own view is, if you're, let's say, bearish of the yen like us, I wouldn't wait. I'd just drop a trade in, okay, a small one, then look to add. You could add on a bounce or on a break lower. So in terms of a bounce, I think you got the 112 level to aim at. So I'll just draw a line in there, those two candles there, bodies and a tail, where that tail swiftly came back. So I think up towards the 112 level, you're going to see rallies fade. Okay, so you could just wait for confirmation off the level, or if it goes through 112, just immediately sell it back through. Okay, what about on a break lower? Well, through the next round number at 111. Okay, so through that tail there, where would you put your stop? I'd put it back behind those three candle bodies there. Okay, and then just see if she runs. Yeah, one good thing about the COT, it does keep your technicals very simple. Just for new viewers again, you don't need to do anything fancy, and you don't look all the way over to the left because that's all gone. Okay, the big money, you know where it is, and basically you trade with the big money, commercials or smart money, against the specs. Where could we go to on the downside? Well, I've given you the longer term levels on the weekly chart, but yeah, you could say you got some support down towards 110 at the moment, but I just don't think that will hold. I think we're going down a long way. 108, then 104.50, then 100. When the yen gets really sort of in a trend, or USD JPY, lasts a long time. You just look at it historically. So yeah, this one, like I said, didn't give us too much. We did chop around, yeah, testing the 114 level and coming off it, but now she looks like she's on the way to the downside. Now, next chart we're going to look at is going to be Euro JPY. And again, I'm going to start very quickly with the weekly chart first. Just very quickly on the weekly chart, then we'll go to the daily chart and draw some levels. Now, in terms of the weekly chart, we had this move up to 132, which we thought would get rejected. It does break the 20-week moving average. But look at it, the price action around the 20-week, just constantly trying to get and hold above it, but not managing it. And last 4 weeks there before this bigger red, very, very tight and sideways. And yeah, we're saying last year we just thought it would break and just come in clear of the 128 level there. And we've now cleared that level, finished at the low of the week, draw trajectory. And basically that lines up the 20-week moving average, which is back at the 129 level. So I personally think now this could be confirming a nice move to the downside. Now, I'll discuss the sentiment, fundamentals and COT in a moment. Where could we go? A lot of technical analysts will probably have their eye on the 124 level and see why. As that breakout struggled, then it cleared it. I just don't feel this time round that's going to hold. I would say towards the 115.50 level, that double bottom there. And really, I'm looking for a move down towards or beneath 112 longer term. That's from obviously the sentiment, the fundamentals behind the chart. But I think, yeah, looking at the weekly chart, the sideways consolidation now for us has ended, and there's a long way to go on the downside. So let's go to the daily chart. Right, Euro JPY daily chart, just very quickly, COT data. Now, regular viewers will know there is no COT data officially for the crosses, but you can make it up yourself or make it yourself by just taking the two majors that make up the cross and work out what the groups have got in each currency, then you have got the cross. Now we do it as simple ratio, commercials 3-1, bearish over bullish positions, okay? Speculators oppose them, 2-1, bullish over bearish positions. COT divergence is 5, which is a decent divergence. It's not a really big one, but it's big enough to back up our bearish view. In terms of the euro fundamentals, just out and out bearish for us. Point number one, no rate hikes on the horizon. Eurozone won't be raising rates in the foreseeable future. We said it in a previous video. A lot of people saying when they ended stimulus, which they've done, that'd be bullish for the euro. No, it would make no difference. It didn't make any difference. Real problem for Eurozone is the economy is slowing up and it's zone-wide. And you've even got Germany in contraction. Okay, the real powerhouse of the zone. You've got high unemployment. I wouldn't be surprised if they had to do some stimulus again next year to try and keep Eurozone afloat. There's a huge amount of political problems as well. Okay, we've had a truce between Italy and the EU over their budget, but look at the problems in countries like France, for example, with Macron. A lot of Eastern European nations unhappy. Italy, yeah, I still think I could come back in the picture. Migration problems or immigration problems. It's not a happy family, okay? So I just feel the euro's going down. And what I quite like about the euro is when economists talk about the data, they're always way too bullish, as we've said for the last couple of months. Yeah, the data just comes in worse than expected. And then the media say, oh, Eurozone not doing as well as they would hope, and all this sort of stuff. It's just doing terribly. So very bearish of the euro, very bullish of the yen fundamentals. Now, in terms of this trade, we have hit our 500 pips since we first started getting really interested in it. And that was up here, did a video when it got up to 133. Big COT divergence, plus 10. And that always alerts us to go with the commercials. Coming at 132.50, nice move down. I didn't bank out quick enough, came out at 129.50 for 300 pips, and then we went to immediately resell, okay? So we didn't think the 130 level could get taken out. See those tail pokes there and failing. Just came back in again. Then I thought we're going to run to the downside, but look what happens. Really frustrating. Good few weeks of just choppy, sideways action and low volatility. Like we said in the last video, when you get choppy sideways action, it'll probably, well, it will break one way decisively. Our view was down. And they're the two candles we noted. So for fresh positions, that'd be a nice level to come through. Our view, just well clear of the 128 levels, so you're not caught in the round number turbulence. A lot of orders around a round number. Regular viewers know we like to get them cleared out. Just draw a trajectory, which is there. That's just the slope of the trend. So you got two trend lines effectively that are resistance. So just before the round number, then at the round number. If you're coming in fresh, just stick your stop back behind this 20-day moving average. Okay, where would you come in? I'm not particularly fussy about an entry in terms if I'm bearish. Like I'm bearish here. If I wasn't in, I'd just put a small position in and look to add. Just add on any bounce. So we bounce back above 127. I'd just sell back through the round number. Yeah, if we did get through 128, I'd sell back through 128. Okay. So my view is if you're bearish of a position or bullish, you just put a small position in and see how it goes. You've always got the opportunity to add, but at least you're in the move. And I just feel there is so much downside in this pair. We did see the longer term support levels, where the shorter term support level, you could say here, on these candle tails, but for me, this is not significant support. We're very focused on the big money and the fundamentals behind the chart. Got the breakdown. I'm now hoping that the The consolidation we saw here, the frustrating period, it's over, and we're going to see a really good move to the downside. Heavily bearish of this pair, just a bit, like I said, frustrated with that sideways action, but hopefully now that's over. Now let's go and look at another trade we've been looking at for a while, which is going to be CAD JPY. Right, just on the CAD JPY daily chart, I'm not going to do the weekly chart of this one. I'm just going to give you the level that I'm aiming at on the downside. You can go and check it for yourself. It's fallen quite nicely, but still a long way to go on the downside. I'll just do my levels in a moment. In terms of COT divergence, +6, okay. Commercials 3.5 to 1 bearish over bullish trades. Speculators 2.5 to 1 bullish over bearish trades. It's a big enough divergence to have us still heavily bearish. In terms of the CAD, it's bearish on falling commodity prices. They've peaked. They're in a bear market now, in our view, and also risk off. We don't think we get risk on in the markets again, or big risk on. CAD is a long way to go on the downside. Now, in terms of this setup, a little bit similar to Euro JPY, the way we've been playing it. When we got up to this 89 round number and stalled, we just wanted to come off the level. So through those two candles there, that's the candle we're in at, and basically came in at 88.65. We're now down below the 82 level, so near enough 700 pips. And that is, just for new viewers, why the COT is so valuable, because you can stick with the long-term trend. Okay, we do come down, sideways up. You have this sort of sideways and rallies, but the big trend is down. And in terms of our last video, just in terms of getting in, on that red candle there, just coming through here, okay? We do come through, then we come back. That might panic a lot of traders, but if you've got the COT on your side, you're going to have to stop well back from that 20, okay? We fade. Nice move down this week. Now, in terms of where we're going on the downside, 75 is weekly support we're aiming at. So there's still a long way to go, well over 600 pips from where we are now. Okay, but how would you enter it? My own view is like same as Euro JPY. Really, if I was bearish, I'd just put a trade in, and then I think we are going to get some sort of retracement. But just in case we follow on, okay, you're in. Where could we retrace to? I think this level here should hold any rally. I'm not even convinced we'll get to it. We can see where we break up here, find support, push off, push off, push off, rejection, back up, and now decisively through. Now, in terms of putting a trade in, or an extra trade, get above 82, I just sell back through the round number. Got above 83, again, I just sell back through the round number. You'll have to see how the price action progresses, or you can follow this one. It's in our guest pair section of the site. But this has been a really good performing pair for us, and I think there's more to come from it. Okay, now in terms of the next one, it's one we've recently got interested in, which is NZD JPY. So just kind of started with our trading in it, so to speak, in a reasonable size, and I think it could do as well as this one, or maybe even better. So let's go and have a look at the chart of NZD JPY. All right, just on the daily chart of NZD JPY. Again, I'm not going to do the weekly chart. I'll just give you my levels on the downside, which are a long way down. This setup's slightly different for us. We covered it in a video last week, saying probably break down, or we thought it would break down. It's broken down quite nicely. Now, in terms of this pair, we noticed the commercials really bought into this support level here. As we came down through the 20, they accumulated longs, pushed off the level. Speculators coming in heavily short against them. That candle there, then we get through the 20-day moving average, and we're off to the upside. A little bit of sideways here and a move above 77. But what we really liked about it was when we got above 77, the commercials removed all their longs, came in short. The speculators who'd been short go long against them. That means that, yeah, for us, the trend is on borrowed time to the upside. And in terms of the way we played this one, we're very aggressive, actually. Well, we normally are. Just like to get a trade in early. These two candles here couldn't get up to the 79 level. So we just sold back through 78.30. A little bit of sideways as we try and hold this 20 here, which we had there. A little bit of a battle. Then that candle, that was the last video we did on this pair. We're just saying come through 77 and look for follow through selling, and that would be the candle that would trigger anyone fresh short. There's the attempt to get back to the 20-day moving average. We finished blue, then that red, nice move, and nice fall down to 74, about 74.60, isn't it? So we're in at 78.30. So good few hundred pips in this one. So basically around 400, isn't it? If I've done my maths right. But it's a decent move, okay? But far more to come on the downside. Where are we going to go to? Well, go back to here. Then I'm looking for 60 on the downside. That's longer term, of course, okay? So in terms of playing this one, I just feel, yeah, like I said before, small position in. Then you've got the opportunity to add. Level of resistance I don't really see getting taken out is there. You can see why. We go up, come back to it a couple of times, push off, decisively broken. Just feel, yeah, rallies are selling opportunities in this one. So if we got above 75, just sell back through the number, or above 76, back through the number, or any stalling here, okay? Just feel this is a trend that is just starting, okay? So it started well, and we hope it continues. I'll just draw a trajectory, which I'm actually thinking about. I don't really need a trajectory, but you've broken the triangle. There's the 20-day moving average. So in terms of rallies back to here, do you want to put your stop behind the 20-day moving average? I don't think you have to be back behind 77, because that's going to snake down if we do have a little bit of a rally. So I think back here is fine behind those two candles there. So yeah, hopefully this one runs quite nicely. And in terms of our trading in the end, people say, why have you got so many different trades in the end? I treat them as kind of one, but I'm not sure which one is going to move the quickest. So I've kind of spread myself around a bit. In terms of other yen pairs we've been looking at, one I haven't covered today is CHF JPY. We had some really nice movement down in that one as well, but it's just not as volatile as the commodity currencies, okay? So I'm thinking we're moving to risk off. So I've only got a small trade left in that and put it in the commodity currencies. Looking at a few other yen trades as well. And in terms of the NZD, did I mention the fundamentals? They're really just the same as the CAD. Commodity prices are going down as far as we're concerned. Risk off is here to stay. Also, what makes me very bearish of the Kiwi is one of New Zealand's major trading partners is, of course, China. And I think China's going to have real difficulties in 2019. So for us, it's going okay so far. We'll see if it continues. But yeah, I'm just heavily bullish of the yen, and yeah, 2019 I think it's going to be the currency that, I know you can't look too far ahead, but the way I see things at the moment, I just see really big upside in the yen in 2019. So that's the video. Just for anyone new watching, I would strongly recommend you research the COT. It's just such a great tool to have as a backup to your technical analysis. Right, thank you very much for watching me as per usual. Take care. Have a good day.